10. Germany, 29.65%. An individual is liable for tax on his income as an employee and on income as a self-employed person. An individual who meets the test of a permanent resident of Germany will have the tax calculated on his income in Germany and from overseas. 9. India, 30%. India has a well-developed tax structure with clearly demarcated authority between central and state government and local bodies. Central government levies taxes on income customs duties, central excise, and service tax. 8. Costa Rica, 30%. In Costa Rica, the taxation of individual is based on the principle of territoriality, meaning that all personal income that has a foreign source is tax exempt. Only revenue earned by an individual within Costa Rica is subject to an assessment by the tax authorities. 7. France, 33%. Taxation in France is determined by the yearly budget vote by the French Parliament, which determines which kind of taxes can be levied and which rates can be applied. 6. Monaco, 33.33%. Monaco's policy of not charging residents income tax has fostered the common misconception that the country is an offshore tax haven, writes Eleni Genta, the Principality's ambassador to the United Kingdom. 5. Brazil, 34%. In Brazil, the corporate income tax is combination of a 15% basic rate, a 10% surtax on income. Brazil corporate tax rate, actual values, historical data, forecast, chart, statistics, economic calendar and news. 4. Venezuela, 34.5%. In Venezuela, the personal income tax rate is a tax collected from individual and is imposed on different sources of income like labor, pension, interest and dividends. The benchmark we use refers to the top marginal tax rate for individuals. 3. United States, 35%. In the United States, a tax is imposed on income by the federal government, most state government, and many local governments. The income tax is determined by applying a tax rate which may increase as income increases to taxable income as defined. Individuals and corporations are directly taxable and estates and trusts may be taxable on undistributed income. 2. Japan, 38.1%. Tax rate of 38% for lease and income of 228,880. The scheme of tax has been divided into the parts 40% marginal rate and 10% property tax. Cameroon, 38.5%. In Cameroon, the corporate income tax rate is a tax collected from companies. Its amount is based on the net income companies obtain while exercising their business activity, normally during one business year. The benchmark we use refers to the highest rate for corporative income.